All right. I think we're live now. All right, guys, welcome to the session. Good evening, good afternoon, good morning, depending on where you're watching me from today. Welcome to the live session. Now, all right, guys. I think there was a little issue with the connection, but it's fixed now. And I want to know if you guys can hear me clearly. All right, let me know in the chat if you guys can hear me. Let me know in the chat if everybody can hear me, and we're gonna get started. Okay, perfect. Once again, guys, welcome to the session. Welcome to the Octa live trading session. My name is Ambrose, as most of you guys already know. But I'd like to know you guys as well. So let me know in the chat your name and where you're watching me from, guys. And while you do that, I'll just run through the quick disclaimer just because of time. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. I see you from Nairobi. Let's see. Lucy from Nairobi, Kenya. Welcome to the session. Lucy, marvelous. Can hear me. Welcome everybody. Wow, we have a lot of people tuning in today. Welcome to the session, guys. So for those of you that don't know my name or who I am, my name is Ambrose Ebuka. I have 6 years of trading experience and I've built a style that blends precision swinging with strategic scalping. So if you don't know what these trading styles are, in the course of today's webinar and today's session, I'll let you know what they are so you can understand better, and also for yourself as well, because you need to know the kind of trader you are and the style of trading that you would adopt. I specialize in gold, that's XAU USD, GBP JPY, and GBP USD, maintaining over 85% accuracy, backed by discipline and non-stop back testing. Once again, guys, welcome to the session, everybody. So we're going to run through the quick agenda for today. We're going to go through the economic calendar. You guys know I love to look at the economic calendar and check the economic calendar every time. So we're going to be doing that. And I'll walk you guys through zone trading as well. You know what it is, how to use it. That's a strategy that I use. So I'll walk you guys through that. We're going to look at the dollar index. That's where you have DXY and correlation with other pairs as well. So we're going to do the dollar index review, analyze the pair, and we'll look at the dollar index, you know, the US dollar against gold, GBP USD, AUD USD, or whatever pair. Now that I've even talked about it, let me know in the chat, guys, what is your favorite pair to trade in the financial markets? What is your favorite pair to trade in the financial markets or in the Forex market? Let me know in the chat. I can even extend to commodities like gold, you know, and this is like US 30. Just let me know in the chat what's your favorite pair to trade, and we might just look at that today as well. And I'll walk you guys through how to trade with a plan. All right, it's my second stream with you guys on the Octa Broker YouTube channel for the year. You know, the first stream we had about 7 days ago, we did quite an amazing analysis. For those of you that were in that stream, you would recall that we looked at gold, you know, pushing above the current consolidation, and that's exactly what price did. Price pushed all the way to the upside, you know, giving us over 2,000 pips move that you probably would have capitalized if you took the trade. Amazing trade. We're going to look at that today as well. But most importantly, we'll talk about how you can trade with a plan in 2026. I'll just walk you guys through that briefly at the end of the session. All right, I'm seeing some people in the chat. Marvelous says I'm a beginner. I'm still on Euro USD. Okay, well, every successful trader you see today once started from, you know, being a beginner trader. All right, every successful trader you see today once started from being a beginner trader. So You just made the first step on becoming potentially successful in this market. Congratulations and welcome to Forex trading. Euro USD is a good pair to start with, the high liquidity, and also it's a simple pair, so it's a good start for you. Marvelous. Matilda says gold, XAUSD. Uchenna Martin says gold. Barnabas says gold and GBP JPY. Okay, I already assumed I would see a lot of gold traders in the chat today. But again, welcome everybody to the session. This session is going to last for about 45 minutes, and you guys are already using the YouTube live chat to ask a question, so continue to do that. And if you're just joining and you've got questions for me, use the YouTube live chat to ask your questions. I'm constantly looking. I think I'll just keep it this way so I'll not bend to the side to see your questions. Okay, I think it's perfect. So I'm constantly looking at the live chat to see if you guys have any questions, and I'll answer your questions. So we're going to have a Q&A session for today's trading section, and I'll answer all your questions during the Q&A session. I'll pick some as we go anyway, but if you're just joining, welcome to the session. I'm going to get right into today's live trading session, and I told you guys that we'll talk about the economic calendar first, and the zone trading strategy, which is what you're seeing on your screen right now, how to use it, the information surrounding the zone trading strategy, would go to the live chart for the dollar index analysis. But before we start, I'm going to ask you guys a question right now. Let me know in the chat. Do you use the economic calendar? Let me know in the chat. And how frequently do you use it? Let me know in the chat. How frequently do you use the economic calendar? Do you even use it at all? Let me know in the chat, guys. Let me know in the chat, guys. And how frequently do you use it? I'm going to show you guys what the economic calendar looks like. Okay, Matilda says, I use it on a daily, every day. Even on Sundays, huh? Let me know. You said daily, so do you use it on Sundays as well? Evelyn says, I don't. Lucy says daily. Those of you guys saying daily, do you use it on Sundays as well? Or you're saying every trading day? I can't really pronounce this name. I'm going to try. Lekian. Oh, come on. No. He says he doesn't use it. Okay, I'm just going to try. I'll say OD. That's what the name ends with. OD. OD9802 says he doesn't use it. Evelyn says I don't use it. Marvelous says I don't practically use it. I'm still trying to understand how it works. Regardless of your answer, guys, we're going to look at the economic calendar today. So if you use it on a daily, there's probably one or two things that you'll be able to learn from the analysis we're about to start before we go to technical analysis. And if you don't use it at all, then you're in the right place. Just pay attention. If you have a note, get ready, because I'm going to dive into how you can use the economic calendar to understand and analyze fundamentally, understand these key events, and improve your trading analysis. What should we be expecting from XAU? We're going to get to the analysis for gold, and this is a really good question asking about gold. We already did an analysis in the last session. Gold moved 2,000 pips in our direction. I'll look at that again and we'll analyze the markets together. But for now, we're looking at the economic calendar. Matilda says Sunday is just overview for the week. Okay, because we don't really get economic events on Sundays. But yeah, Sunday is a good time to, prepare for the week ahead, prepare for the economic events for the week ahead as well. And it's a good one. Let's see. Any other question? Okay, let's go. Guys, we're gonna start with the economic calendar. Now, if you're just getting started with fundamental analysis and you're new to official websites and you come down to analysis and education and you want to come down here, So if you're using your mobile phone, you wouldn't see all these options. You would only see trader tools, analytics, and education. You'd have to click on analytics and then you come down to economic calendar and it brings you over here to this page. Hmm. Okay, someone's asking how to get it. So the Octa official website, octaafrica.net, and or you can use the Octa official app, the mobile app, the Octa trading app. You can just go to the navigation section and you see economic calendar there as well. And when you use the economic calendar, the first thing or one of the things you want to pay attention to is the time range, right? You want to look at the events for the day. Except it's a new week and you want to, just do an overview, then you can go to the events for this week. But today we're going to be looking at events for today. And you also want to confirm the time zone, right? So what time would this event be released? The time zone has to match your current location. So if I travel to Hawaii, I'm going to set it to, my time zone will now be set to Hawaii. So I don't miss out on the information, right? I'll keep it at this for now. And you come to advanced filters. Yeah. So under advanced filters, for me, I'm only highlighting the high impact news, and that's because I focus mainly on the high impact events. I focus mainly on the high impact events. It brings about, high volatility to the market. But if you're just a beginner and you're getting started, you want to also pay attention to medium and low impact event, just because you can get an idea of what these events are about, and for general knowledge as well. I don't know if the connection is glitching from my end. I'm looking at the feedback now and it's literally glitching. Let's see. Okay. Guys, at any point, if you stop hearing me or something, just let me know in the chat. If you stop hearing me or if it glitches, just let me know in the chat and I would work towards fixing that. Now, you've seen that I have identified the low impact. I've included that, the low and medium impact events right now. And you can see that the economic events are now plenty, right? More than just with the high impact. Again, low impact would probably not bring any movement to the markets. It's just basically for education. Medium impact, the same thing. High impact is the one that is expected to bring about high volatility to the market. But just because of time, would only focus on the high impact events and would go ahead and analyze the high impact events. Let's look at the live chat, see if we've got any questions. All right. So the first economic event we have is the AUD unemployment rate. Now, if you're going to be using the economic calendar for any form of analysis, you need to be aware of the currency that the event would impact. In this case, this would impact the Australian dollars, as you can see on the left side. The unemployment rate SA, you can click on it, you'd see what it means. Octa goes ahead to give you a definition of what it means and how you can understand it. But this is basically the report that tells you how many people want a job but cannot find one in Australia. And it's shown as a percentage. So when you see 4.1, it means out of every 4 people who are, out of every 100 people that are willing and they are able to work, only 4 people or 4.1 don't have a job. Okay, that's what it means. So when you see this figure, that's what it means. Now, here's what I want you guys to understand. A country is made up of people. If people are working, life moves forward, they earn money, they pay rent, they buy food, they support families, businesses would stay open. But if businesses are unemployed, you begin to see that spending drops, businesses would struggle. You'd even see crime and stress increase, the economy is going to slow down. So unemployment is like checking the heartbeat or the pulse of a country. Let me know in the chat if you guys are following. Let me know in the chat if you guys understand. Or let me give you guys maybe a relatable example. Now, imagine you have a street with 20 houses. If almost everybody on that street has a job, the kids will go to school, the shops around will be busy, people will fix their cars, life will just feel normal. But imagine half of, the people in the street lose their jobs. They'll start to cut their spending, shops will close early, people wouldn't be paying their rents on time, everybody just becomes, everyone will become very tense, and that is what unemployment does. The difference is that it does it on a national level. So in today's report, what happened? We had the previous at 4.3. The previous tells you the report the last time this news event was released. So the last time it was released, the figure was 4.3. The expectations from analysts and economists was 4.4. Okay, I'm seeing you guys say you're following. Hajara says, I'm happy to be here. Welcome. The expected or the forecast was 4.4, and the actual report came at 4.1. Now, here's what I want you guys to understand when you're using the economic calendar, especially the Octa economic calendar. You have to look at this last sentence that is written here. And what does it say? A decrease in the figure is seen as bullish for the Australian dollar, while an increase is seen as bearish. Now, I'm going to throw the question in the chat before I even give you guys the answer. Did we get a bullish or a bearish result today on the Australian dollar for the unemployment rates? Let me know in the chat. The actual was 4.1, forecast 4.4, previous 4.3. Did we get a bullish or a bearish result for the Australian dollar? If you know the answer to that, let me know in the chat. Guys, I thought you guys were going to have a session or a section rather in today's live trading section for Q&A, but I'm still going to throw you guys questions, so it's very important that you're following. So let me know in the chat. Was this a bullish news for the Australian dollar or was it bearish? You can just say bullish if you think it's bullish, and you can say bearish if you think it's bearish. Okay. Marvelous says bullish. Osai Mechi says bullish. Safarat says bullish. Lucy says, okay, everybody is literally bullish. So 4.1 means fewer people were unemployed than expected. And if you said bullish, you're correct. That's generally good news for the Australian dollar. When the unemployment is low, the economy would look healthy. The central bank would feel less pressure to rescue the economy. The country's money, which is the Australian dollar, would become more attractive. And what happens? People worldwide will start to trust that economy. It builds more confidence for Australia as a nation. The second one that we have is the employment change. So employment change tells us how many jobs were added or lost in the economy over a month. Now, the unemployment rate shows percentage. Yeah, you can see 4 point something, 4.1. The employment change is a head count. So as you can see, the previous was minus 21,300 jobs. The expected jobs were 30,000, and we got an actual additional number of 65,200 jobs. Let me give you guys an example. Think of unemployment as, let's say a company hires 50 people. That's growth, right? But if it goes ahead and fires 50 people, then something is wrong. Now imagine, thousands of companies doing all these things at once. That is what employment change means. But this actual report that we had right now is a very huge jump. Not only did we have an increase, we had more than double the expectations. The forecast was 30,000. We had 65,200 jobs added. And this also reversed last month's job losses because we had minus 21,000 jobs from last month. So what does this mean? It means a lot of families are going to be earning income. It means there will be less financial stress. It means there will be more spending. It means that there will be a stronger, local business establishment in Australia. And this is good for the Australian. Don't worry, I'm not going to ask you guys. It's good for the Australian dollars. It's going to already see. And I think I already gave you guys the hint. The next one is the GDP. Guys, if you're following, let me know in the chat. If you understand the analysis and how to read the economic calendar, let me know in the chat. So the next one is the GDP, annualized GDP, the gross domestic product. And as you can see, if you already know, the GDP is the total value of everything a country produces. GDP is the total value of everything a country produces. Food, phones, services, rent, transport, cars. If the money is moving, the GDP would record it. But there's one question the GDP answers. Is the country growing or is it shrinking? This is what the politicians, the investors, the banks, even the governments, they care about. Let's say you have a business and this business sells 1 million naira this year, and then the next year it sells 1.5 million naira. It's growing. And that's what GDP does, but for the entire country. Now, this numbers is showing us the previous was 4.3%. The expected was 4.3% as well, and the actual came out at 4.4%. What this means is that the US economy grew slightly more than expected. 4.3, 4.4. Obviously, 4.4 is, you can already see, I told you guys, pay attention to the last sentence. High reading is seen as bullish. So you had a slight increase, and this is good for the US dollar as well. Let's look at the next one. The CPCE, the core personal consumption expenditures, right? So what this measures is how fast prices are rising. But this excludes food and energy. So its main focus is on healthcare services, everyday spending and rent as well. So for those of you that know the Federal Reserve, this is the favorite measure of inflation for the Federal Reserve. The Federal Reserve is basically the central bank of the United States, just like we have Central Bank of Nigeria, Bank of England, Reserve Bank of New Zealand, all that. And for those of you that are wondering, oh, why is food and fuel prices excluded? It's because they jump a lot. They're influenced by conflicts, issues from supply, even weather. So when you remove them, you see the true inflation. So the previous was 2.8, the actual came out at 2.7. This shows you that inflation cooled slightly. Now, I know I use inflation a lot. I've talked about inflation a lot. Most of you don't understand what inflation is. It affects everything. It affects the cost of living. It's basically how high prices have increased in respect to the value of the goods. It affects loan interest. It affects business costs. It affects saving values as well. And this is what the Federal Reserve used to decide whether to increase the interest rates, whether to, keep them high, whether to start cutting them. And if we have lower inflation, it increases the chances of a rate cut. So what this report tells us is that the prices are still rising, but not as fast as before. Let me know if you're following in the chart. We have the Consumer Price Index CPI for the New Zealand dollar Q4. We're going to talk about that as well. When you see something like this, or quarter on quarter, it just tells you how much prices has changed in the last 3 months. Now, the CPI the general, definition for every CPI, just different countries. The CPI measures how much prices are increasing for everyday things people buy. It's a good measure for inflation as well. Tells you how much prices have increased for everyday things that people buy. We're going to look at some of the things that, CPI affects. Let me see if you have any questions. No questions. Now, when the prices are increased, for things, your money will start to buy less. I'll give you an example. Let's say you bought cooking gas for $850 last year. This year, you're probably buying for $1,500. You can see that it's almost double the price. Inflation quietly affects everyone. Your rent would feel higher. You start to increase your budget for groceries, even transportation, everything. So CPI is a key measure of inflation. It helps the government answer the key question: are people struggling more than before? Imagine you spend 100,000 naira a month to live comfortably. Then after 3 months, food would increase, transport would increase, electricity bills would increase, like NEPA bills. Now you need like 110,000 or 120,000 to live the same way. That 10,000 or that 20,000 increase is inflation, and that is what CPI measures. I believe you guys understand now. So the numbers we're looking at is a previous of 1%. The forecast is at 0.5%. The news has not been released. It's going to be released at 10:45. You guys know that we have difference in time zones for different countries and different currencies as well. But the forecast is at 0.5, which means analysts, experts, they're expecting the price to rise, but even slower than before, because 0.5 is still rising, but just slower than before. Let me know in the chat if you guys have questions. Let me know in the chat if you guys have questions. And when you see YOY, it means year on year. It compares the prices today with exactly 1 year ago. So how much more expensive is life compared to this time last year? All right, that's what it measures. It's the same thing with this. It's just the difference is just in the duration. The year over year is stronger, basically because it looks at the long-term view. After now, we're going to go to the technical analysis. I just want to be sure you guys don't have any questions concerning the fundamental analysis and these economic events. And we're going to go to technical analysis. All right. No questions. All right, guys, if you have any questions, you can still ask. I'll just circle back at the fundamental analysis. Right now, we're going to be looking at the technical side of things, and we're going to start with the dollar index. You guys know most of the pairs that I trade, gold, GBP, USD, Euro USD, are paired with the dollar. And when you trade currencies that are paired with the dollar, you have to look at the dollar index to know what's going on. You have to look at the dollar index to understand exactly what's going on. And as you can see, the last time we looked at the dollar index, we were trading up here, right? That was on Thursday last week, trading around here. And now the dollar has dropped significantly to the downside from up here. The first thing I want you guys to note is that this is a key and a significant level for the dollar index. We have these zones mapped out from way back last year. You can see how price tapped into it and began to pull down. Now, why is the US dollar falling? Just think of the US dollar as a popular product in a global marketplace. When people look at the price, they will say, what is it worth compared to other currency? So the dollar index or the dollar itself, it goes up or down depending on how much people want it and how confident they feel in the US and global situation. And right now we're seeing the US dollar fall because and even political, tensions, majorly with the Greenland situation. We also have interest rate expectations. A lot of traders and investors are watching, what the Federal Reserve, the U.S. Central Bank, might do next. If the if the Fed rather cuts the interest rates, then you'd earn less on the returns on U.S. dollar investments. And what does that happen? What does that cause? It makes the U.S. dollar, the demand for the U.S. dollar to fall, and the dollar weakens. And this is a big reason, the dollar has been under pressure even before the geopolitics weighed in. And then we also have the investor confidence. Again, remember I told you guys, if investors feel nervous, maybe it could be something that has to do with geopolitics or economic uncertainty. They might sell US assets and dollars, even if everybody sees the US as a safe haven. If they feel uncertain with, economic or geopolitical affairs, they might sell their US assets and the US dollars, and this can push the US dollar down and boost other currencies or other assets like gold. And we're gonna get to gold, and you guys will see why gold is pushing even further, guys. If you're trading gold right now, the only bias I have on gold is to continue to buy gold because gold would potentially touch $4,900 per ounce before the end of tomorrow. We'll get there and I'll show you guys why. Guys, we analyzed this last week, and when we get to gold, don't worry, guys, when we get to gold, I'll just analyze gold. But I just want to wrap up with the dollar index so you guys can understand why it's falling and how long it will continue to fall. Now, the dollar falling isn't always about US economic weakness. It's also about confidence and risk perception. And when you have the idea that this is going to be going on for quite a while, you'd see that all these levels we have mapped on the dollar index, these levels have been mapped for months. But you can see that even while the market is dropping down, it's respecting all these levels. And that's why zone trading is important. That's why understanding and analyzing key levels before you execute trades are very, very important. You don't just come into the market and click buy, click sell just because you want to make quick profits. The market respects zones. Every single candlestick you see on here, they tell you traders' reactions, human reactions. And one thing about human is we love to repeat history. And that's why you see the markets come to retest all these zones. And obviously, if we get to break below this previous low, we're coming all the way down to this point and potentially all the way down for a retest here. Let's look at gold. Gold is moving crazy, guys. There's absolutely no reason to be selling gold right now. All-time high has been broken. Massive bullish momentum to the upside. Guys, the last time we looked at gold, gold was literally consolidating in this zone. And I told you guys, I'm expecting a breakout of this consolidation to the upside to 4680 and beyond. But we're going to test 4680 first. And that is exactly what gold came to do. Breakout, consolidate at 4680, continuous break to the upside. Every zone you see here, guys, all these lines have already been mapped and gold just came down to retest them. These lines have been mapped from previous momentum. From the last time we analyzed gold, rather, last week, we mapped these lines and I told you guys, these are the areas I expect gold to potentially come for retest. And that's exactly what gold came to do. 2,000 pips above our entry. Let me know in the chat if you guys took that trade. Let me know in the chat. If you took the trade, let me know in the chat. Guys, again, if you're trading gold, this is my bias, right? You can also conduct your analysis by yourself, but I'm telling you guys, gold is still pretty much bullish. It, it might be a bit late to enter right now just because there's potential for a pullback. But guys, gold is still pretty much bullish. I expect gold to retest, to make a test at 4,900 but again, cycle level, so we can do 4899 before the end of the week. So my only direction on gold right now is bullish. Last week I told you guys the trend is your friend until it bends, guys. You can't be seeing all these breakouts from consolidations, the pullbacks, and the continuous bullish momentum, and you're selling. You're on the safer side when you're with the trend. If you go against the trend, you have less to profit from. So what is gold? Gold is a precious metal that traders and investors see as a safe place to store value. You might be wondering, oh, why is gold going up? Why have we seen all this bullish momentum? Like I said, geopolitical tensions and uncertainty. When there is political drama, conflicts, trade fights, even diplomatic issues, people get nervous, and that nervousness makes investors seek safe assets like gold. And what does it do? It increases the demand and the prices would go up. The interest rates and the dollar as well is also influencing gold. Remember, gold doesn't pay interest. So when the interest rate goes down, people are like, well, if the interest rate is down, then I might as well just invest my money on gold. Gold becomes more attractive compared to cash or bonds that might give you lower yields. And then we have all these central banks and governments that are buying gold, like China, India, Turkey. They've been buying lots and lots of gold for their reserve. When these big institutions buy gold, it creates strong demand and increases the price. Guys, I was just we're still on the session and gold is already approaching 4898. Now we're looking at gold testing 4899. Even while we're on the session, gold has already just moved 60 pips. Amazing. So these are some of the reasons why gold is pumping. And guys, I still expect that retest at 4900. Even though it's a bit late to get in now. At the time I said this, gold was trading at 4892 thereabout. So that would have been like a quick 80 pips profit trade on gold. But again, if you miss any opportunity on gold, you can always, I mean, the market is always here, right? So you can always readjust and you know wait for the market to get into your zones and trade accordingly. But I was even saying tomorrow we're gonna get that potential test at 4900 today. It's about 15 pips away. But just because it's a cycle level, gold can be funny. And yeah, now that we already talked about 4899 hit, now that we already talked about the analysis and trade ideas and missing out, if you haven't already, you can use the link in the description to join the Octa and call out trade ideas, and you can use that to improve your trading and also your analysis as well. Okay, someone is asking about inflation. Marvelous. Like, what do you not understand about inflation? Let me know. What don't you understand about inflation? What don't you understand about inflation? Let me know. Let me know in the chat so I can answer your question accordingly. Guys, let me know in the chat if you understood the gold analysis. Let me know in the chat, guys. If you understood the gold analysis, let me know in the chat. Good analysis. Let me know in the chat, guys. To break out of 4900 probably tomorrow, but it looks like we're already getting there today. And again, when you see the market make all these moves, it should increase your confidence in, the buys and tell you how strong the buys are taking over the markets right now. But when you see a move like this, guys, when you see a move like this, you have to expect pullback. That pullback will probably come once gold has broken out of the 4900 site level. Breakout, consolidate, and pullback. So if you're getting it right now, you'll be getting it a little late. It's better to buy low than to buy high. 4900 achieved. Someone said the live was breaking. Okay, I think the question is about CPI, yeah? So just to recap on CPI, the consumer price index, which is CPI, it measures how much prices are increasing for everyday things that people buy. It basically measures inflation. Remember, I told you if you're buying gas for 850 last year and this year you're buying for, let's say, 1850, the 1000 naira that added to that 850 is inflation. And then you see that your money will begin to buy less. So you need to make extra 1000 naira to be able to buy the same amount of gas that you were buying last year. Or if you say 100,000 naira a month on groceries and then prices of things increase, to buy that same groceries the next month, you might be spending 110,000 naira. That 10,000 naira is the inflation. So the Fed, the central bank, they look at these things and it gives them the idea, oh, is the cost of living pressure reducing? Should we increase or reduce the interest rates to curb inflation? And when they make these decisions, it affects the pair. Someone said they can't hear me. Let me know if you guys can hear me. Let me know in the chat if you guys can hear me. Ah, oh, I see. It's breaking a bit, yeah. All right, guys, if you have questions, please go ahead and ask me your questions. Guys, gold is moving, man. We have that nice break out of $4,900 per ounce, and gold has moved even 40 pips higher. But again, I expect slowdown around this point. You know how the markets can get exhaustion and then continuous move to the top side or even a reversal. So from the time I said gold was bullish, gold has already moved about probably 100 pips. But this is just on the 15 minutes time frame, guys. My overall buyers from the high time frames are still bullish on gold. Don't see any reason to sell, no reasons to buy. So if you trade gold, then I believe you got the analysis on what to do. Okay, everybody can hear me. Perfect. Perfect, guys. Perfect. Now, I just wanted to quickly run through. I mean, we already get into the 1 hour mark. So I'll just quickly run through how you can trade with a plan, and avoid emotional mistakes. This is important. You can always come back and watch this stream if you miss any points, but I'll try to go through them. And it's a very relatable one. A lot of traders, are not profitable, not because the market moves against them, but because they trade without a plan. Your edge in this market comes from preparation, comes from discipline, comes from rules. So I'm going to give you guys a simple guide, to trade with a plan so that you can stay in control, avoid emotional mistakes. If you're ready, go ahead and type control in the chat. Go ahead and type control, guys. So the first step is to define your market buyers. What are you looking for? Look at structure, look at trend, look at the fundamentals. Are you looking to buy or sell? The structure, the trend, fundamentals tells you up or down. You need to have a bias first. Dollar is strong because of this. Gold is strong because of this. Know why the market is moving before you think about entering. This is the first step of your plan. It has to start with a clear understanding of direction. Don't guess. It has to start with a clear understanding of direction. The next step is to identify key levels. You have to identify your supply and demand levels. These areas where price have reacted before, you have to identify these levels. If gold pulled back at, let's say, 4,900, just like now, that's a key level. You have to trade with key levels. Trading without key levels is like you're trading blind. The next step is to wait for confirmation. Don't just enter because price reached your level. Look for confirmation. Look for momentum in the candlesticks. Your confirmation can be a break of structure. Your confirmation will protect you from false moves. The next step is to define your risk. Decide how much you're willing to risk before you enter the trade. And when you put your stop loss, don't move it. I know a lot of you guys go ahead and you start moving your stop loss and you're hoping the trade is going to work. Guys, risk control is the difference between surviving and quitting. So when you make all these small drawdowns, there are lessons. It's the big risk and the big losses that will end your journey. And when you've set out this plan, which is the 5th step, when you set out this plan, you have to follow it. If you look at from step 1 to step 4, all the conditions are met, take your trade. Don't override your plan based on emotions. Trust the plan that you have built for yourself. And finally, you have to review and learn. When the trade ends, regardless of if it's a profitable trade or not, review what worked and what did not. Have a trading journal. Write down all your reasons for entry and exit and your emotions as well. It always feels nice when you make a profit, but reflection builds skill faster than that dopamine you get from winning trades. I believe you guys got all the steps. Like I said, guys, if you missed anyone, you can always come back to watch this video and you can get them again and again and again. Guys, if you've got questions, please go ahead and ask me your questions. And if you haven't already, you can download the Octa Trading app with the link in the description. It offers a wide range of instruments with low spreads, fast execution, and zero commissions rather. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. If you made it to this point, congratulations. You have received a promo code that would give you a 100% bonus to your deposit. Follow the steps you see on your screen. Put in the promo code Ambrose E100, double E, guys. Ambrose E100, and you get a 100% bonus on your deposit. There'll be a volume indication there for you to see how much volume you need to trade to be able to withdraw your bonus to your trading account or to your bank account. Now, guys, if you've got questions for me, go ahead and ask your questions in the chat. This was an amazing session. I think the only little issue we had was with the connection, because I'm seeing the feedback and it's glitching a bit, but it was a good session. You guys were interactive. And now you get to ask me questions. So, one, what strategy can you recommend for a beginner trading Euro USD? I'm still in my back testing phase. So Euro USD is a slow-paced currency pair, right? If you trade Euro USD and you trade gold, you'd see the difference. So before we talk about strategies, you need to identify the kind of trader you are. Are you a swing trader? Are you a day trader? Are you a scalp trader? To know the kind of trader you are, you need to try them all. Guys, the fastest way would be to look at your personality. Are you a fast-paced person, or are you a calm person, a patient person? Then you can start with swing trading. But you still have to try these 3 trading styles: swing, scalp, day trading. And then you see over a period of a month which one works for you, and you pick on that one. But for strategy on Euro USD, I recommend zone trading, even for all pairs, just because, number one, I use it. I've been using it for years, and also in every single time frame, you'd see a zone. Markets move from supply to demand. So zone trading strategy is what I would recommend for you. And if you're in your back testing phase, it's good you're starting with Euro USD. Try it out for a month before you start to, make adjustments on your strategies, okay? Questions, guys? Any other questions for me? Okay, since you guys don't have any questions, or maybe some of you are typing. Okay, since you guys don't have any questions, or maybe some of you are typing because of the slow mode that is on, I'm going to ask you guys one question, okay? I gave you 6 steps on how to trade with a plan and avoid emotional mistakes. Mention at least one step in the chart. Go ahead and type at least one step in the chart on how you can avoid emotional mistakes and trade with a plan. Let me know in the chat, guys. At least one step. I mentioned 6, 4 steps, and then I said the 5th one. When the 4 has aligned, you can now do the 5th one. And after the 5th one, I mentioned one more. Let me know in the chat. Those of you guys that want to start skipping and going back to get the steps, be careful. Okay. Do we have any answers, guys? Really? No answers? Okay, someone said never move your stop loss. Well, that's under a step, but what was the step? Never move your stop loss was under step number 4. But since you said it, I'll just tell you what step number 4 is. Step number 4 is define your risk. Decide how much you're willing to risk on the trade. Never move your stop loss. So I'm going to go through the steps again. Identify and define your market bias, the direction. Identify your key levels. Wait for confirmation. Define your risk. Follow your plan. Review and learn. At what level did you say go to do trades? I'm going to go ahead and go back to the chart. Yeah, I told you guys around those zones. Gold is already trading in that zone right now. The retracement is on the lower time frames. I think we're going to extend this to 4920. The retracement is market is just going to breathe after a long move like this. The breather can be One bearish candlestick. But the reason you're looking for that retracement is not because you want to sell, it's because you want to be able to capitalize on that low move and buy gold to the upside. The only time you're looking to sell is when gold breaks below major key levels to the downside. But anything you're looking at right now that drops would be seen as a minor, exhaustion retracement to push gold further to the upside. We can only start looking at sells if gold begins to break below this level, and all these key levels here. But as long as we're trading above all these levels, we're still bullish on gold. And the market is even pushing higher, trading above 70 pips above 4900 and over 100 pips from our entry on this session today. Really good, if you ask me. Any other questions, guys? All right, everybody. If you take one thing from today, it should be that trading without a plan is gambling. Trading with a plan is how professionals survive and grow. Define your buyers, mark your levels, wait for confirmation, control your risk, follow your plan, and review every trade. If you do this, the market will never control you. You will control your trading. Thank you guys for joining this session. So, okay, someone said you mentioned to always wait for confirmation and also identify the risk. That's correct. Thank you guys for joining the session. And if you're watching this after the live, maybe you're watching it as a feedback or just after the live has ended, you can always comment and we'll respond to your comments in the comments section, right? Thank you guys for joining, and I'll see you next